Hello, greetings, and welcome to Dividend Blasters. This is our 44th video, and the topic today is this is why I choose Qualcomm to invest in. That's right, another chip maker. As you know, I've already covered, and I'm heavily invested in Broadcom, but I'm always looking for new investments to give me that extra special total return. So I'm looking for price appreciation because that basically will hopefully signal growth, revenue growth, income growth, cash flow growth. But I'm also looking for a growing dividend. Very, very important. I get that from Broadcom. And based on my research, I see that I will get that from Qualcomm. Let's press on. First, I am not your financial advisor. Anything I say should not be taken as financial advice. The purpose of this video is for information and education. It reflects my own personal opinions, my research, and my experience as an independent investor for more than 30 years. So please, I urge you, do your own research, consult a financial advisor prior to making financial decisions. I thank you for joining me today and hope you find this video to be educational and entertaining. I'd kindly ask if you'd give us a like. And at the end, consider subscribing to our channel, Dividend Blasters. Feel free to share the video with a friend or a family member. So here's our approach. I am going to give you a brief history and background of Qualcomm. I'm going to cover some of the summary metrics. I'm going to talk to their key performance metrics. Then I'm going to go into the dividends. I'm going to talk about the all important dividends that Qualcomm offers, and not just the yield and the growth, but also things like the growth rate and the duration of the dividend streak. I'm going to go a little deeper. I'm going to talk about their competition and the landscape around them. I'll do a competitive analysis of them against their peers and competitors. I'll talk to price, return, dividends, valuations, growth, profitability, risk, income statement, balance sheet, and cash flow measures, and show you how they stack up against their peers and competitors. First, I'm including a couple of articles. I'm not going to read through them completely, but they're here for your reference. That basically gives a little bit of background, a little bit of the color commentary of Qualcomm. And in some, Qualcomm is the world's leading designer, developer, manufacturer of wireless technology that goes into mobile devices, cell phones, iPads, tablets, all that good stuff. And they've been doing it for a long time, and they've got scale, and they are a leader technologically in this field. So check out that article. I highlighted some of the key snippets for your benefit. I think you'll find it informative and interesting. This article actually refers to Broadcom as their closest competitor. I found that to be fascinating. A lot of these chip makers, they don't directly compete with each other because there's so many different facets of the chip making industry. Like for instance, I didn't cover Nvidia here because they're really more of a graphical process unit developer, whereas Qualcomm is more mobile slash wireless technology. Um, so they're both chip makers, a little different. So they're competitors, but a little bit different. So take a look at that article. And then there's another article here. And really, the key takeaway of this article is that this is, relatively speaking, a cheap stock. In this industry, in this sector, and for what they deliver, it's a good buy. And I tell you that that is probably the key takeaway from this video that you're going to get. So you can actually stop listening right now, and that would be it. But I think you're going to find this to be really informative. So take a look at that article. And you'll basically see that it is what they call a rare technology value play. Cutting edge of mobile wireless technology. They have lots of plays across multiple industries where they're going to be very important. So, going a little bit deeper into Qualcomm, they have three major business segments. They have the CDMA technologies, and that's really their production and development segment where they develop all sorts of nifty integrated circuits. I'll go into this a little deeper. Then they have the licensing segment where they license their technology. They got several patents in development and design of their wireless technology. And then they have their strategic initiative segment where they invest in new companies, startups to help their competitive edge. And here is a little bit just deeper of what I was just saying. Basically the CDMA technologies, they are developing integrated circuits specifically around 3G, 4G, and 5G for use in wireless voice and data communications, networking, applications processing, multimedia, global positioning products. I already talked about the technology licensing. You can read this at your leisure. And then, of course, strategic initiatives where they're investing in startups. They were incorporated in 1985. They're headquartered in San Diego, California. So, summary metrics. Qualcomm closed yesterday at $117.13. Okay, as of yesterday, Wednesday, July 5th. Keep these numbers in mind. Their forward PE ratio is 14, and their forward dividend yield is 2.66%. That's going to come into some relevance on the next slide. So keep those two numbers in mind. And I also say that the earnings per share of 8.28 is more than sufficient to meet that forward dollarized dividend rate of $3.20. Their market cap's about 134 billion. Okay, so 1414, the PE ratio 2.66%, the forward dividend yield. So comparatively speaking, that PE ratio of 14 is quite cheap compared to the Dow Jones Industrial Average aggregate PE of 22.8, as well as the S&P 500's 19.61. So it's a cheap buy relative to everybody else. Now, this is looking above and beyond the chip maker market. This is looking at everybody. Okay. Now, the dividend yield, again, it's better. The dividend yield for the Dow Jones is 2.07. The S&P 500, it's at aggregate level 1.57, even cheaper. Qualcomm's is 2.66. So really what you have in the larger market, you're going to have a lot of companies that pay very low, modest, anemic dividends or don't pay a dividend at all. All right. So that's what's bringing it down. Okay. Price return or price appreciation. This is Qualcomm's price appreciation for the max time horizon that I can get out of seeking alpha. And it's for the last 30 years. 6,231%. So if you were to buy a share of Qualcomm stock, you're going to see a price return of 6,231% over 30 years. It's just price, doesn't include dividends. But dividends do play a role, as we see on the next slide. Total return, 9,575%. Well, the difference between this slide and the previous slide is dividends. Dividends account for over 3,200% of that return. So if there's an instructive moment or a teachable moment here, it's that dividends do matter. All right, especially if you're dripping. And that's really the name of the game here in dividend reinvesting. If you can, you want to be dripping or dividend reinvesting 100% of those dividends back in your holding. It's going to accelerate the development of your dividend snowball and grow your holdings and ultimately grow your dividend income. Seeking Alpha rates Qualcomm A's and A pluses on their dividend grades. Dividend safety, they rate an A minus. And why is it that? Because that payout ratio is 28%. And we typically don't like to see a payout ratio more than 60%. If you recall, payout ratio is the dividends paid out over earnings, and 28% is safe. They can more than cover it. They get an A plus for dividend growth. Why did they get that? That 5-year cagr of 5.53% is pretty sweet. And I tell you, I like the dividend yield. It's not perfect, but for this sector, it's pretty damn good. Forward yield 2.66%. They get a B plus. Consistency, they get an A. And you know what? They're going to be getting an A plus soon. That dividend growth streak of 19 years is amazing. They are 6 years away from becoming a dividend aristocrat, and they're going to get there. Dividend yield, the forward yield, they get a B plus, as I mentioned. They have a dividend yield of 2.66%. It's about 1 percentage point over their peers and competitors. So that's pretty darn good in my book. And you know what? You can look at all these. You can see these are all green, which these are very positive grades. I'm highlighting the ones I'm mentioning to you, but you can look at these at your leisure. Um, Essentially, the major takeaway here is that the dividend yield is pretty good. Dividend growth, A plus. I already talked about the cagr and the dividend growth streak. Uh, they have a 1-year growth rate for the last trending 12 months of 10.29%. That gets them a B, and that's pretty good. The 10-year cagr, they get a very high grade. They're more than 1 percentage point above their peers at 10.74%. I really like the return on net tangible assets. 74% looks like 71%, I'm sorry, it's almost 3 times as much as their peers and competitors. So anyway, they are a growing dividend entity. They're a machine. Here are their peers and competitors. So you basically see Qualcomm here on the far left, and then next to them is Intel, Texas Instruments, a firm called Analog Devices Inc. or ADI, AMD, Advanced Micro Devices. We've heard a lot about them in the news. They have been having a hot run in 2023. Micron Technologies, another firm, ticker symbol MU, and of course, Broadcom, which I'm a fan of and an investor in, ticker symbol AVGO. Just some of the key info nuggets here is that Intel by far is the largest as far as manpower or number of employees, over 131,000. Uh, Qualcomm's number two, but they're less than half. They're 51,000 employees, and everyone else is smaller. And Broadcom is the smallest, 20,000 people. Interestingly, Broadcom has the highest market cap of 383 billion. Qualcomm's is competitive, a little bit smaller than Intel's, as well as Texas Instruments, which is 160 billion, but much bigger than Analog Devices, smaller than AMD, much bigger than Micron Technologies. Um, Trading, I got to tell you, I really do like the price. As I mentioned, they closed at $117 yesterday. I'm really not looking too closely at Intel. I will say that Intel has had a fairly hot run over the last month and a half. But the last several years, they have not been performing well, and they cut their dividend by 66% last year. So they're here, but I'm really not looking closely at them. So when I'm looking at Qualcomm, I'm looking at the prices here against everybody else. And they're a little bit more pricey than AMD. They are more expensive than Micron Technology, much cheaper than Broadcom, which is over $860. If you're looking at total return, let me say this: Broadcom has been dominant, market dominant this year and over the horizon. And I got to tell you, a lot of that market return, that total return, is attributable to the price going up this year. They've gone up significantly. They're trading over $860. Just a few months ago, they were in the 600 range, but they also pay a decent dividend. AMD does not really pay a dividend worth writing home about. Um, I don't think they no they I don't think they even pay a dividend. So they have been all price appreciation. So I kind of don't really look too closely. I am looking for firms that pay dividends because I'm looking to accelerate my holdings. I have a few non-dividend stocks, but that's really been my approach here in my investment philosophy for me anyway. Um, I would say that total return Qualcomm is decent over the time horizon. I would say that the Broadcoms and the AMDs are really the anomalies. You don't see a lot of that uh, today, except with these two firms and Nvidia. And Nvidia's dividend is anemic. It's been all price appreciation. But Qualcomm has a decent dividend and it is price competitive. So those are the major takeaways here. So you're not going to see huge price returns compared to an AMD or a Broadcom because uh, AMD and Broadcom and the Nvidias are just red hot with artificial intelligence. I think that Qualcomm has been very steady and they're going to take off, in my judgment. That's what I'm seeing. I think they're really just kind of under the radar. All right, let's press on. Dividends, their dividend yield, forward dividend yield, and trending 12 months is outstanding. It's better than Broadcom's. It's better than Micron Technology. AMD doesn't have one. It's better than ADI's. Uh, I'd say Texas Instruments is as good, or maybe a little bit better. But and I've been looking at Texas Instruments, but I just think that I'm going to share with you that I think that the price earnings ratio is a little better for Qualcomm. So I'm drawing Texas Instruments up and above some of the others around dividends, but there'll be another level of peeling back the onion, and I'm going to get to that. But I kind of showed you a little bit here. The payout ratio is outstanding. It's second to none for Qualcomm, 28%. ADI is close, a little under 30. Broadcom's is very good, 43%. I'd say the others are a little too, forget Intel. Texas Instruments is not bad, but it's not as good as Qualcomm's. As far as the dividend cagr goes, I will tell you the Broadcom's is outstanding. Texas Instruments is great. ADI's is great. Qualcomm's is good. It's good. It's not as high as those, but it's steady. But what you're going to see here is that the consecutive years of dividend growth is outstanding. 19 years, more than Texas Instruments, which is 17. ADI has 19. You might want to take a look at them a little closer. Um, and Broadcom's is 11. So the Broadcom is a newer company. So anyway, all right. Seeking Alpha gives A's and A pluses to Qualcomm around dividend safety, growth, dividend yield, and consistency. Also to Texas Instruments. And ADI rates very highly, as does Broadcom. The others, I'd say that Micron Technology, I wouldn't consider them because the dividend yield score of F as well as dividend consistency is score of F. I would kind of count them out. And I would kind of count out Intel because of the dividend growth. And really, I'm not sure why they get a C. I think they should get an F because of the slashing of the dividend. But that's where we differ. All right, next. Here is key to all of this valuation. Qualcomm is head and shoulders above everybody else here. These PE ratios, the forward PE ratio and the trending 12-month PE ratio, are better than everybody else's. The forward ratio, 18.65. It's better than everyone else's. The trending 12 months, 12 and a half. Now, that's simply outstanding. That is a market leader here. And you can see that some of the other measures reflect that as well. Next one, growth. Well, I got to tell you that AMD is probably got the best 5-year revenue growth here amongst everybody's. I'll tell you though that ADI is half of that, and it's still good. And right behind them is Qualcomm, about 12.76%. Right behind them is Broadcom, 12.27%. I got to tell you, I'm really glad that I got my Broadcom. Makes me feel good. Now I can kind of relax and say, okay, I got my Broadcom. What else is there? I think it's Qualcomm. That's my opinion. I will tell you that same order here. The net income 3-year cagr, it's Broadcom. Then it's ADI, and then it is Qualcomm. All right, let's go to the next one. So, if there's a major takeaway here is that while you're not going to see Qualcomm leading every single measure, they are competitive. They're in the top three in many categories. Lots of cases, Broadcom's number one. Or AMD's number one, but AMD doesn't pay a dividend. Broadcom does. In some cases, the dividend is bad for some of these other competitors. Qualcomm is competitive and is always offering a good growing dividend. So I've said before, and I'll say it again, you can't just look at one metric. You really have to dig, do some research, do some analysis to get to ground truth. And we're getting there here. And I think the ground truth that we're approaching is on a lot of these metrics, Qualcomm is competitive on price, specifically PE, they're a market leader. Okay. Profitability. Well, all these firms are profitable, maybe except Intel. Um, but you know what? I like the net income margin. It's competitive with Texas Instruments, ADI, and Broadcom. Their return on equity, they're number one, with Broadcom closely behind. Return on assets, they're right behind Texas Instruments. And return on total capital, they're tied as far as number one with Texas Instruments. Cash from operations, they're number two after Broadcom. And then net income per employee, well, Broadcom's way ahead. And I would say that it's Texas Instruments and then Qualcomm, and then everybody else is way, way, way behind. If you take a look at those numbers, they're just staggering what Broadcom's achieving. But also, I'd say less than half is Texas Instruments, and right behind them is Qualcomm. All right, next one. So, price performance. Well, I've said this before. It's been Broadcom and it's been AMD. They both been hot this year. AMD has been particularly hot. Really, it's been Nvidia and AMD. Broadcom, which has been kind of a under the radar, has been getting it done. Qualcomm, they're steady. They are steady, steady, price competitive. All right. Risk, I got to tell you, there is a lot of price volatility in the chip market. Texas Instruments probably has the least amount of price volatility uh, than anybody here. And then I would say ADI is maybe a close second, as well as Broadcom, and then Qualcomm. Okay. And just if you haven't listened to my videos before, I will tell you that I'm looking at the betas. And the beta basically is a comparison to the larger market or the S&P 500. A beta of 1.0 is the S&P 500. So if you're looking at the 24-month beta for Qualcomm, Qualcomm is about 33% more volatile than the larger market for the last 24 months. Texas Instruments is 4% less volatile. So that's why they are shaded there. So if you can live with a little price volatility, you might get a little bit greater return. If you're looking for safety, well, maybe it's Texas Instruments for you. And don't get me wrong, Texas Instruments, I believe, is a good investment, but I'm looking closely at Qualcomm here. And I tell you, I think that the PE ratio makes it a rare price buy. I like their revenue. I would say they're competitive. They're really number one in revenue, 41 billion. Well, actually, they're number two, Intel, but I'm really not looking at Intel. Broadcom's number two. Net income, they're number two after Broadcom. And if you look at operating income, they're number two after Broadcom. So they have decent profit, decent net income. This is a company that is making things happen. Looking at the balance sheet, well, I tell you, when I'm looking at this, I'm looking at a couple of key ratios. I'm looking at the current ratio, I'm looking at the covered ratio, and I'm looking at the quick ratio. And with current ratio, I am looking for the company or the investment that has the highest ratio, or it's the ratio of current assets over current liabilities. Uh, Number one here is Texas Instruments, 5.17, and then it's Micron Technologies, 4.26, and then it's Qualcomm, 2.42. Right behind them is Broadcom. And then I'm also looking at the covered ratio, which is the EBIT over interest expenses. And as far as covered ratio goes, I'm looking at Texas Instruments, and I'm looking at the highest numbers. Remember now that ratio, I'm looking at Texas Instruments, which has a ratio of almost 41, and then Qualcomm is at 23. And then the quick ratio, I'm also looking at the highest number possible, and that's basically liquid assets over quick liabilities. And for quick ratio, it's basically Texas Instruments and Micron Technologies. Um, Again, you can't just look at one metric, you got to look at a lot of them to get the ground truth after doing a little digging. Cash flow, I think that basically it's clear. Broadcom has the best cash flow, followed by Qualcomm. So you're looking at 17.6 billion and then 8.9 billion, and everybody else is less. They're in the 7 billions or the 5 billions or the 3 billions. So, what are the key takeaways from this? First and foremost, Qualcomm is the world's leading manufacturer of wireless technology. They have a better PE ratio and dividend yield than the Dow Jones Industrial Average and the S&P 500. They got a better PE ratio than its peers and competitors. This is a cheap stock, relatively speaking. It is a rare technology buy. Something to think about. They got a better dividend yield. They got a better payout ratio. They got a better dividend growth streak than its peers and competitors. They are very competitive with regards to their revenue and their income growth and their profitability relative to their peers. So, are they number one in every single one of these metrics? No. But I'll tell you what, they are in some of them, and in a lot of them, they're number two. They have income statement measures that are only second to Broadcom. Their balance sheet measures are competitive. Again, they're usually in the top two or top three against their peers with their balance sheet measures. Their cash flow is really good. It's second only to Broadcom. So, to me, to kind of tie this up, I would say that the key takeaway here of all these is that this is a rare technology buy. $117 PE ratio in the 8 to 9 range is really amazing. I am going to be investing in Qualcomm tomorrow. This is not financial advice. This is just my opinion. So, folks, that is all I have for you today. I thank you for listening and coming with me on this journey to talk about Qualcomm. I hope you found it enjoyable. I'd kindly ask you to give us a like and consider subscribing to our channel, Dividend Blasters, and share this video with a friend or a family member. Until our next video, have a wonderful July 6th, and God bless.